Okay, now let's get started. So good afternoon, everyone. Welcome to ProcureLA procurement series. So we are now on Module 6, and this is Fast Track Your Team to a Winning City Contract. So Module 6 is Navigating Post-Bid Success, Key Steps After Winning a Contract. And I'm Christina Espiritu from PACE, Pacific Asian Consortium and Employment. And PACE has been around since the 70s, actually, as an organization as a whole. But the Business Development Center started in the mid-90s. And what we've done is provided business business training, technical assistance, one-on-one counseling, and access to capital to many entrepreneurs like you. And in addition to being an SBA microloan intermediary and a community advantage lender, PACE is also a certified CDFI, which is a community development and financial institution, a community development entity, and also an official CalCap lender. And we also house an award-winning women's business center. And just to give you a context of where we are, so we have been offering these modules for the past 6 weeks. So we started with Module 1, where we navigated the City of LA government structure and contracting opportunities. Then we unlocked procurement opportunities with the City of LA's RAMP portal, which is one of the procurement portals. Then we introduced the certifications for small businesses in Module 3. Then we also had Module 4, which is crafting marketing strategies to the City of LA Department and Prime Contracts. And last week we had mastering bid proposals, which are the key strategies for RFP submissions. And now we're in Module 6. And then Module 6 is navigating what actually happens once you've actually won the contract. So if you are curious about the other modules, I hope you will visit later on our e-library, and I'll give you the link to that one, and it will show you all the modules that we have here available. And just a little bit of information about ProcureLA. So I am sure that many of you has heard of the wonderful things that are happening in LA in the next 4 years. So we all know about the Olympics in 2028. And then before that, we have FIFA, the World Cup going on next year, and then the NBA All-Stars, and then the Super Bowl. So as we can see, there will be many opportunities for business owners to be involved with this through the procurement process. So what ProcureLA is a resource that we have, and we've teamed up with the City of LA, Karen Bass's office, in order to help businesses like you grow through contracting. So what we do is we offer free services and resources to help you equip you with the tools and knowledge to acquire contracts, right? And so, and just a little bit more about PACE. So PACE has been a strong partner throughout this year. So in the past couple years, we have served over 370 minority business owners. We have helped in awarding over $100 million in contracts, over 66 million in financing capital and bonding, and also have helped create over 1,000 jobs and jobs created and retained. So what are the things that we do and offer through procurement? So we can help you with access to business assistance, procurement bulletins. So we'll tell you about procurement opportunities and related resources, one-on-one counseling sessions where we can help you with bid proposals and then submitting RFPs, access to resources, as I said, any follow-up technical assistance, and then also workshop training like these, and also supplier diversity conference matchmaking events, which we have done last year, and I'm sure we will do this year. So eligibility requirements to be part of ProcureLA. So you must be a for-profit business operating within the city. You must have an active BTRC number, which is a business tax registration certificate. You must be operating from a commercial location and have a valid commercial lease. So you have to have an actual brick and mortar location. You must identify the negative economic impact resulting from COVID-19, and you must be in good standing with the Secretary of State. So people have asked me, so what happens if we're not eligible? So no fear, because what we do is through PACE, we have many different programs that we can put you under. So what I suggest would be to go to procurela.com, register through that one, and then if you don't qualify through ProcureLA, as I said, we'll put you under our programs and we'll help you the same way as if we're in ProcureLA. So it's just under a different program. So with that said, let's get started. Again, my name is Christina, and then I'm just going to go ahead and start introducing the speakers and let them talk briefly about themselves before we start the panel. So let me start with Jennifer Whelan from PACE.
Hi, everyone. My name is Jennifer Whalen. I'm a senior loan counselor at PACE. From all the other services we provided, and then I think always we hope that lead you to grow your business through more, grow your revenue, right? So throughout that process, financing is a key component. So my role in PACE is that I help small business owners to find more opportunities for access to capital through different kind of lending solutions or other financing solutions. And PACE is a direct lender, as Christina mentions, but we also have lots of other lending partners. And my job is to help you to find the funding needed to assist your business growth.
Yeah, thank you, Jennifer and Jose.
Oh, sorry about that. I was in mute. My name is Jose. I'm new to PACE. I spent 17 years in procurement for private companies, mostly aerospace and electric vehicle manufacturing. Also spent 15 years working in retail management. Looking forward to helping businesses.
Thank you, Jose. And Andrew?
I'm Andrew Barrera. I'm the procurement relationship manager here at PACE. I have about 30 years of experience in business consulting. I used to work in the mayor's office and for the state assembly transportation. I was a transportation deputy. And I specialize on working with the larger businesses going after large contracts. And we're here to help you, to work with you.
Thank you. And then Renee Coda?
Good afternoon, everybody. Renee Coda. I'm the CEO of CMG Alliance. What our firm does is we handle business development for our clients. At the end of the day, we utilize the term government contracts, what we close for our clients, and it's really 5 specific lanes: federal contracting, state contracting, municipalities, counties, and utilities, and then all the subcontracting factors off of those. Here today, hopefully to share some knowledge on contract execution and negotiations. Had a long-standing relationship with PACE, great relationship actually directly with Andrew. I think we closed one of the largest contracts for PACE a year ago, one of their clients. So happy to be a part of the presentation today and looking forward to it.
Thank you, Renee. And Shanette?
Hi, good afternoon, everyone. Shanette Anderson. I'm the Deputy Director of Contractor Development for Emerald Cities Collaborative. We're the third-party implementer for the Southern California Regional Energy Network's workforce education and training programs. And for our e-contractor program, we assist small contractors who are looking to perform projects in the energy efficiency space and that have a sustainability component. But some of our program services, which all are free to business owners, are technical assistance. We also host workshops. We're actually having a Bonding 101 tomorrow. We have longer academies on contract management, bidding and estimating, all construction related topics. So happy to be here today and, happy to share any information for our services with those in attendance. Thank you.
Yeah, thank you, Shanette. And just a few housekeeping items. So make sure you're on listening mode. Use the Q&A to post questions. I know some of you post questions in the chat, but it may get lost in the shuffle. So it's easier if you have a specific question to use the Q&A. So we will have a session later on towards the end, about 10 to 15 minutes to ask questions. But then if you don't get to do so, I will, you can also have access to the speakers that we have. You can send us questions later on. And then any of the webinar recordings are available. It's on our e-library on ProcureLA.com. And so now we'll just get started. And just to give you, as I said, some sort of context, we are going through the whole procurement process. And so last week it was helping with RFP submissions. And so this week it's like you had actually gotten a winning RFP proposal. Now what, right? So you get something from the agency saying like now you have the contract. So then what happens? So either Andrew, Renee, or Jose, just kind of give us a little walkthrough on what typically happens. Let's say you have an RFP and it's actually had won something. And so what would the client get first of all, after that?
Okay, I'll go ahead and start. So if you get awarded a contract, then there's going to be a transition period. So before you actually start performance, it often is another opportunity for you to maybe renegotiate some of the terms. Typically, that won't happen, but sometimes it will, because during the process, the buyer, or whether it's government, private sector, or utility companies, will see that maybe they wanted to expand the contract a little bit more. And so basically what they'll do is you'll sit down with the project manager assigned to that contract and develop a relationship with them. You'll probably review your schedule of performance and your key performance indicators as to what's expected in the timeline and the quality of work. And so it's kind of a run through of what the actual contract that's been awarded. So many times when we're bidding on proposals, we look at the RFP and sometimes they have sample contracts in there. And it's really worth noting that you should look at those sample contracts, because that's going to give you an idea about different types of regulatory, legal, and financial requirements. And so you'll kind of do a review with all of that. You'll see what your start date is. There'll be the time that you're going to be pulling in increasing your workforce, or making sure that you got the insurance or bonding. So all those basic indicators of being able to perform on the contract, that's generally what you'll do at the very beginning.
Yeah. And so with that said, thank you for the introduction. So are there any key elements that businesses should focus on when they're negotiating a contract?
I'll jump in on that question, Andrew. So one of the key things that you really want to take into consideration is understanding who your target is, understanding who the agency is, whether it's an agency or whether it's a prime contractor, and really what they can negotiate on. Like one of the extreme examples is safety. Let's say you're a construction company or whatever the case is, there's not going to be any room for negotiation on safety, but maybe there's a negotiation on payment terms. And this is where it really behooves you to understand who your target is. Once you start looking at RFPs, once you've targeted an agency or a prime contractor that you're going after for that specific contract, you need to understand a couple things. Specifically, what are their pay cycles? You as a small business have to understand, how do we make sure we're getting paid? Does this particular agency or this prime contractor, do they pay their bills on time? Everybody typically has like a net 30 in that contract, but what are the typical cycles? In other words, how many approval processes, how many iterations of approvals does your actual submission have to go through to get approved, to get funded? What are you looking at as far as revenue sources, and understanding in that contract, okay, the expectation on you is going to be huge. If you haven't had a contract before, kind of like what Andrew was talking about, the expectation is you get that contract, you get that pre-award, and you're popping the champagne corks and you go, okay, we're ready to go here. And then all of a sudden you go, well, what do we do? Understanding when you get to that table, when you get to that kickoff meeting, you need to be prepared. Preparation is everything, and it really falls into project management. And when I use the terminology project management, a lot of you sit back and go, well, I don't understand project management. It doesn't matter. You as a small business owner, you do understand project management, because it's delivery. That's all it is. You need to boil it down and understand, okay, step one, on day one of the contract, this is what we're going to do, and actually craft that out. I can tell you as a negotiation tactic, that day one that you come to the table during that kickoff meeting, if you are prepared with an actual project management document and saying, okay, step one, here's what we're going to do. We're onboarding all our personnel. Step two, this happens. Day 12, this happens, and actually have that schedule mapped out for them, as opposed to coming to the table in a kickoff meeting and having the agency to tell you, okay, this is our expectation. This is what we're going to need to do. And typically that's what they're going to do. But I'm telling you, as far as a negotiation tactic, when you're ahead of the game and you come to the table prepared that way, I mean, sky's the limit, because one or two things are going to happen after that kickoff meeting. You get that contract award. Both parties are going to walk out of that room after the kickoff meeting, and the agency is going to put their head in their hands and go, oh my gosh, these people have no idea what they're doing. And their risk, their stress is going to go up because they're not going to think that you're going to be able to perform on that side. You're going to walk out of there going, wow, everything's great. They were the nicest people in the world. Everything is good. Where that's going to come to a push come to shove is when you start submitting your invoicing, start submitting your monthly reports. This is why it really behooves you. Got to be prepared for that. So stay ahead of the game. Know that project management is contract execution. You don't have to be a certified PMP person or have some, crazy certification to go ahead and understand how you're going to deliver your product or your service. Be ahead of the game, understand that. And it really comes down to your business development. Who did you target? What agencies did you target? Do you understand their protocols specifically on that side? One of the things, the best example, City of LA, the supplemental tax. If you're targeting the City of LA and you don't have your tax ID number with the city and even know, hey, maybe there's an additional anywhere between 1% to 6% supplemental tax on that. But if you're not finding that out until the time that you get a contract award, you're behind, right? Where you go, oh my gosh, we were really competitive on this. Now I got to look at an additional 6% that we weren't really expecting. This is where it falls back to my very first comment to say, know who you're targeting, know what your target is, know exactly what the protocols are on that side.
Mm.
So
So so you had mentioned the kickoff meeting. So is there a window of time when these negotiations take place where you say, okay, there are a few meetings, a first meeting, and then so just kind of walk us through if there is some sort of timeline or a window of a window, like a time frame.
that's a great question. So the typical time frame, always remember 30-day increments are the typical time frame. And that varies from industry to industry, whether it's construction, maybe it's professional services, manufacturing, whatever the case is. But kind of your benchmark is that 30-day window, meaning whether it's a federal contract or a city contract, whatever the case is, you get notified, hey, you are the winning bid. What do you know? They have to do some due diligence on their side, kind of like what Andrew talked about, your bonding, your insurance, making sure the requirements are all in order, all that documentation. And then typically they have a kickoff meeting. Okay, we're going to come together and we're going to figure out, this is day one. This is how the contract's actually going to be executed. From that point, depending on industry, if you're in the construction industry, you're going to get a notice to proceed. Okay, day one, January 1, this is your notice to proceed, start at this particular time. A lot of times in that kickoff meeting is where you're going to negotiate when that specific start date is. And there's always going to be some preconceived requirements, right? Where maybe that government official, they're under the gun, where they're going, listen, we needed this to start 2 months ago. And I guarantee you that pressure is going to be pushed down onto you on the contractor. So understand that, understand exactly what they need, how are you going to be able to present some value to them specifically along those lines, understanding their needs on that side. So just know about a 30-day window is typically the benchmark.
Okay. And then Jose, I wanted to get your input. So is this something that you have seen in your many, many years of procurement experience?
Yes, and just to add to Renee and Andrew, some of the key elements that I always saw in contracts was having a dispute resolution mechanism. How are you going to resolve something that you're having an issue with? Another one is that I saw in contracts a lot was a termination and exit strategy. How we're going to get out of this contract if we have to. Also making sure, another key element was that you're in compliance with any laws, state, federal laws, and it's documented in the terms and conditions of that contract.
Great. And so when we're talking about scope changes or contract modifications, is it both sides? So would the agency and also the one who won the proposal, do they get the chance to do the scope changes or contract modifications? Is this something that you've seen?
Yes, it's usually you have the changes and then you forward those to whoever is reviewing your document. You actually have we used to have a lawyer that would review our document and make sure that they go over every word and then we would forward that to the company and make sure they're in agreement with that contract.
Great. And so in your opinion, so Andrew, and it could be for Andrew, Renee, or Jose, what resources or services can businesses leverage for these negotiation support?
Well, generally, if it's like with the larger government entities, sometimes they have business liaisons in those departments that you can work with, but typically it's going to be the project manager that oversees that. I wanted to add, take a step back. Sometimes when you secure a contract, you may be replacing another former contractor. And so there could be a transition period and involved there. And sometimes especially in government, they have like an employee retention program or strategy. So if you have existing employees because they have the expertise because they've been working the contract, you may need to hang on to them. So we had a client that was going for a contract at Burbank Airport, and it was mandatory that they had to keep those employees for 30 days at least before they could bring some of their own employees in. And so part of your contract negotiation could be, well, how do I assess their performance? Do I have access to records, performance reports, those types of things. So you getting that information is going to really help guide you moving forward. Keep in mind, we want, Jose brought up about dispute resolution. And also sometimes there's change orders. So they've hired you to perform XYZ, and things could change, especially with advances in technology and in methodologies. There's opportunities for those contracts to potentially expand or go into another direction. Especially with the advent of technology has really changed a lot of things. So those are potential, because keep in mind, many of the actual project managers or the contract managers for the entities, they have a general idea what needs to be done because it's been documented, but you're the expert and you might be able to bring new ideas or new methodologies to the table, and that could potentially expand the contract. But we got to, then you understand about financing and data collection. And so really understanding all of the metrics that the government or the buyer is using to track performance, and then you're adjusting to making sure that you can implement that.
So
And
this is Jennifer speaking. Sorry to interrupt that. I want to add something right along of what Andrew is saying about contract negotiations, because I think a lot of us shied away from asking they call it mobilized payments, because especially if you take over a project, or if you know that the project owner is desperate to start a project already, then you might have some negotiating power to ask the project owner or whoever to give you some advance payment. So this will relieve the company's working capital needed really extensively, because for you, if I think for how to make the contract success, right? So it is part of it is the financing cost. So just like Renee was talking about that, it's if there's a supplemental tax on top, then you're already behind. If you need to borrow additional money to fund the project, so you have capital, your costs, right? If you take out a loan or you have equity investors, you have a financing cost. So if you can negotiate for the contractor, the prime, to give you a mobility payments, advance payment, then that will be the cheapest cost of capital, and then those probably the fastest funding you can get to help you to generate funds to help your project to execute a project. So this is something that I think is very critical, and don't be afraid to ask. And then that's really will be the fastest, cheapest way to get working capitals to fund this particular project.
Okay. And then I think mostly here we're thinking about just 1 year contracts, but what happens if it's a multi-year contract? So what is the scope or the ability to negotiate, let's say second or third year renewals in your case or in your experience?
Was that for everybody or?
Yes, oh, for everyone. Yes,
Sorry.
yes. Just yeah. Let's say because because we're assuming this is 1 year. So what if it's a multi-year contract, and then do you get the chance? So we talked about the window of time, right? So let's say
That's a
your
great
second or third
question.
year renewal, would there be a chance to negotiate? And then how much negotiation can you do?
That's a great question. And this is something that, especially on the small business side, we stumble all the time because when you see those multiple option years, typically, I'll take the example of a federal contract, a 1-year contract with 4-year options. So most people think, well, I've got a 5-year contract. You don't necessarily have a 5-year contract. And this is where it comes back to understanding the protocol and the focus of the agency specifically, because if the agency actually exercises another year option, there, for the most part, and again, when I make this blanket statement, there are some agencies that may not have any wiggle room here, but for the most part, you're able to come to the table and actually negotiate, whether it's cost of living, some type of cost increase specifically on that. But that has to be done prior to the option being exercised, right? So in
Mm.
other words, if you're on a professional services contract where you have no contact, you're just providing widgets to the city and you don't hear from anybody, you just submit your invoices. Maybe you get a quarterly report, whatever the case is, and then you get a notification, hey, we're exercising next year's option. So you're somewhat happy and you go, wow, that's great. But you know what? We've got our people delivering and they have to pay for parking and we have got to eat that cost. I think that I want to talk to the city about, possibly them taking on that cost. Once that option is exercised and that contract's executed, guess what? I tell people, I give this statement all the time. If it's not in black and white on a dead piece of tree, it's not going to happen.
Mm.
That's where, kind of like Jose talked about, they have attorneys looking through every single word. This is where it's tough on the small business side, where you're going to have to do the same thing. You're going to have to understand specifically what that contract says, because at the end of the day, that's what they're going to follow. But to answer your question, absolutely, but it has to be prior to that option being exercised. Make sure that you're coming to the table. You're notifying your project manager on the other side. Hey, I love to talk about, we've got some situations, options coming up. I want to talk about some specific cost increase, whatever has gone up. Maybe it's supplies. And we know how that's been over the last few years, right? Supply chains have been crazy, where, I mean, you're talking about influxes of anywhere from 10 to 70% cost value, right? I mean, there's no way that you're going to be able to do that. So they have to understand that, but you have to do that prior to that option being exercised.
Okay. And one thing that kind of comes to mind, and this is a question for everyone. Let's say the tariffs, right? Like because of the change in administration, and then there's some tariffs involved. And so what if your second year option has began, right? And so you have a few more months, but then something unexpected had happened. So is that something you had seen before? And then if you have, like, what can you usually do when it's midterm?
Yeah, so I can add to that. One of the events that normally happened when I was in manufacturing is what they call force majeure event. And we would get letters from companies saying they can't perform. So adding that clause into your contract, if you're going to have a multiple year contract, is a good idea. And having your attorney review that.
Okay. So is that something that let's say the government or the agency will already have in their contract, or is that something that you should look out for and say, hey, you know what, this is one of the key elements that I want to add?
Right. That's one of the key elements you should look for in the contract. And if it's not, then, have it added.
Got it. Okay, great. So thank you so much. So now let's go through second portion. Is now we've talked about the contract negotiation. So I know that there's some contract reporting requirements that that businesses would have to go through. So what are the key reporting requirements that businesses should be aware of when they're managing contracts? And this is a question for anyone.
I'll jump in first, Jose, and then you can probably
Okay.
jump on. But as far as the requirements, it's going to be in black and white on that contract, on the requirements and the benchmarking and the submissions and the reporting. Typically, for small businesses, this is what you're going to be hyper focused on, is putting together your monthly reports or your invoices, or maybe if you're in construction, schedule of values, whatever the case is. So you have to be hyper focused on exactly what the requirements are, the reporting system as you submit for financing, because that's the number one thing. That's the lifeblood, right? How are you making sure that you're getting paid? And sad to say that for a lot of small businesses, Jennifer kind of hit on this, you don't want to go in saying the first on the top of your agenda is to say, well, how do we get paid on this? Because you don't want to seem that you're not being amenable to them, to execute on the contract. So that's always an issue, but that has to be at the top of your list. Reporting requirements are really laid out specifically in the contract, and it typically relates to the finance component and invoicing. How often are you invoicing? What does the invoice look like? This has to be a part of your negotiation and at your kickoff meeting. If you have never contracted with that agency or that prime contractor, one of the very first things we talk about all the time, listen, can you send me an example of the invoice? What would you like? What is the invoicing system? Do you have a specific software that you utilize? And I can tell you, like on the federal side, they have specific software. Each independent agency, they have like a WARF system, but they have a training system where they say, okay, take your financing people, send them to this training, 20-minute training, understand how to submit invoices, whatever the case is. Same thing for the county, the city, whatever the case is. That's what you have to understand first. That's where you really need to focus on requirements, my suggestion.
Okay.
And just to add, to Renee, communication is the key. You should have a point of contact who you can call and say, hey, we have this going on, and you can discuss it with. Renegotiating the terms if necessary, and then documenting any changes.
And if I
And
may
so
add
do you,
if I
yes,
may
go
add something
for
to
it.
that is that, so I think I work with a lot of contractors, and I think Shanna will share with my view is that the first thing is that you need to learn how to do your pay applications. You should ask questions and let the prime know or whoever let you know to show you exactly how to do the pay applications. Because as a lender, I saw so many failures for my clients. Hey, I get the work done, but hey, I don't know how to submit the pay applications. I don't get paid, or they get kicked back several times and several rounds, and you get your payment late, right? So the reporting is not just to make the prime happy, it's how you get paid. So the pay applications, how to do it, what each prime contractor required, that's your lifeline. I would suggest that will be first thing in the meeting you get to know, just to get exactly down to what to do. This is the critical items I cannot emphasize enough to make sure that your contract is successful.
Yeah, and I think that goes along with how you can efficiently basically track the progress, right? Look, as we know, I think there's some industries that are more, actually, in your experience, are there some industries that have more stringent reporting requirements than others?
If I can add to it, for me, based on my experience, yes, because especially if you're, for example, for construction companies, if you use union workers, right? Union will audit your payrolls, audit your job cards not audit your job cards every day. They will come to audit your daily job cards to see if the specific workers work for all union jobs, and then if you have any, if you are not signatory, to the unions, do you have other workers that you send those non-union workers to a union job, right? So those audits is very critical. And then if you're not ready to face it, so probably you get yourself into a little bit more trouble. So get those out of the way first. Learn first how to, if you use union worker, how to prepare and what documents the union require and what the prime will require regarding all those payroll records. So those you have to get the training in the beginning to make it sure that you follow everything to the T.
And when you mentioned training, is that training something that, like, how do you get the training? Are there resources that the agency will provide you with? Is that something that you do yourself? So what are some of the training sources that you have?
My experience I share with the clients I work with is that I think different union trades, they have a slightly different requirements. So for example, if you use masonry or use this unions, or you use the cabinetry, they might have the overall similar guidelines, but you know that you're going to hire someone to them first when you even prepare for that proposals, you should go and get a feel of, okay, what's the rate right now? And for 2025, what's the labor rate for different trade or positions, your super performance or I think the trainees, and then what their pays would be and what the union rate would be. And also what's the reporting requirement, even when you are planning to bid for one particular project. I would advise you to do it. So because when you're doing so, you really know if your quote that you submit in your proposal is adequate to cover not just the salary, but also the benefits, and also do you need to hire additional overhead, a staff on the company to just prepare for the paperwork, even maybe it's a part-time employee in the office to handle all those potential reporting requirements, and then though not just the union but also other maybe bonds and insurance and that kind of things, that you have to hire additional staff on the company, that will be your overhead, right? So have you budget enough profit in the projects that you are bidding for to have enough money to cover all of those? Similar to what Renee just said, right? In the supplemental tax, are you aware of all those other extra admin or overhead costs on the company that you budgeted enough profit in the project you're bidding? So those, I would say, is critical for after you have a contract awarded. But if you don't have a contract awarded yet, but when you're submitting an RFP, I would suggest you do all those, you educate yourself beforehand and get those numbers ready. But of course, it's not too late. After you get the contract awarded, you can still jump in to get to learn how to do it.
Yeah, and that's actually my follow-up question for everyone, is that when you get the contract, or actually when you get the proposal, how detailed are the contract reporting requirements? And is it something that you bring up during the negotiations, or is it already detailed when you look at the proposal?
Most of the time when you're looking at that proposal, the agency will have a specific protocol on their reporting on that side. And typically that'll be in there. They talked about the contract examples in a lot of the RFPs that come out. So that's where you'll see, okay, what reporting is required? Is it a monthly? Am I in the construction industry? Are you going to be able to see my daily reports, once a week, every single day, whatever the case is? You'll know that right up front. And if you don't know that, getting to that table, getting that contract award, that's one of the questions. Hey, what would you like to see as far as reporting? Do you want access to our daily reports? Whatever the case is. And here's one of the things that is really burdensome on small business. And I'm kind of hitting on your next question, but
Right.
it's where you say, well, what do I have to do? Do I have to go buy some software for tens of thousands of dollars, whatever the case is? I can tell you, from our standpoint, we design specific software, a bid tracker for every single contract, and it's customized for that, which is very difficult and can be expensive, right? But I'm going to tell you, we started with a spreadsheet. Okay, Monday, the first of the month, this is what occurred. That simple. So the bottom line is you've got to stay organized on that contract, because I'm here to tell you one of the major pitfalls for small business, if you get off track specifically on scheduling, and this happens a lot, no matter what the contract is, professional services, manufacturing, construction, whatever the case is, if you get off track as far as scheduling, you're behind schedule, and maybe that's only happening for a week or a month. When you push that out to a quarter to 3 months time, you may be so far off track. Now you're in jeopardy of being default in the contract, where you go, you're not going to be able to meet these specific benchmarks. This is where it all falls back to organization. And what I would really stress to a lot of small businesses out there, start with the spreadsheet, because a lot of times you may spend money on some specific high-speed, software out there that looks really great. But here are some of the hurdles from that, is specifically when you get that software, let's say you have employees that don't like to utilize it. It's a tool, right? And you've got to condition people to use that tool. What's the easiest way to condition somebody? On a spreadsheet. Okay, at the end of the day, you're going to take 10 minutes and list out specifically what you did and how much time was dedicated to that particular session, specifically on that side. That's one of the best ways to actually condition a lot of employees. And it conditions yourself as well. Let's say you're not a very detailed person as a business owner, that's going to condition you where you go every day at 5 o'clock, I need to list exactly what I did, what I got accomplished, how much time it took, and what was the cost for that. Very simple, right on a spreadsheet. You know, what we really profess to a lot of small businesses out there, try to keep it as simple as possible. Because if you're out there spending money and you sit back after $1 million contract and go, wow, I didn't make any money, that is the most defeating position that you could ever be in. And that happens quite often, to be very honest with you. So it's really about organization. And one of the key things, Jose hit on it, you've got to have communication with your client or the agency.
Right, and that seems to be a great advice. Is a lot of times simplicity is the key, right? So why spend a lot of money on maybe complicated software that no one will use, right? And then I think the other takeaway that I have is that whether it's stated in the RFP or not, there are contract reporting requirements that you will have to go through later on. So you have to make sure that it's something that you ask if you don't see it. And then because the reporting requirements do take labor, so it's part of your overhead, whether it's a tool that you have to, you have to pay for, or it's people hours, right? Labor hours that you have to actually include in your proposal. So before I close this topic, any other things before I go into the surety and bonding and the rest? Okay, so I'm sure we'll have questions later on, so we can go back to more specific ones. So now that we have the contract reporting, we've established the fact that there will be some sort of contract reporting requirements. Another compliance that I see all the time are surety and bonding and insurance. It seems like it's on every proposal. So Shanette, I welcome. I just wanted you to give us some sort of overview of what is a surety bond or an insurance. So like which ones have you seen in the past? What common ones?
So for once you're awarded a contract, we know that we've got to submit our performance and payment bonds, but I want to just mention that the bonding process actually starts before you're awarded the project, right? And so you should be able to qualify for bonding prior to submitting a bid, especially for those bids that are like low bidder. And that's because, with that, you can submit a bid bond. And so that's because if you are the lowest bidder, you're deemed the lowest bidder with the agency, and you cannot qualify for bonding after the fact, you can get yourself into some trouble there. So you want to make sure that when you're looking at projects that you want to bid on that require bonding, that you can qualify for bonding. And so the common required types of bonds are a bid bond. You need to make sure that you can qualify for that. And then the performance and payment bonds are what are used on a project. So the performance bond will guarantee that you as the contractor will perform the work to the specifications of the contract. And then the payment bond will guarantee that you'll pay your subs and your material suppliers and vendors for that work on the project. And then for the insurance piece of that, you'll need to provide proof that you meet the insurance requirements that are set by the agency. So typically that's like around a $1 million policy, but depending on the agency and the project, it could be more. So for example, I used to work with Los Angeles World Airports, and so their airside projects, sometimes their insurance requirements would go up to $10 million. So it just depends. But you will need bid bonds, performance bond, and payment bonds.
So can you walk us through, let's say I got awarded this contract and then I go to you and say, oh, they said that they need some sort of bonding. What do I do?
So
Right? So let's say,
so you would need to, before you bid on the project, you would need to make sure that you qualify. So you would go through the process of applying for a bond line. And so the way that works is, first of all, bonding is not like insurance. So when we're talking about bonding, it's more similar to like establishing or like applying for a line of credit. With insurance, losses are expected. So like with our auto insurance, we get, you know, our rates based on you know, analysis that's done to, you know, because losses are expenses. There will be auto accidents, for example. So with bonding, it's the opposite of that. They don't want, the bonding companies, you know, are expecting no losses. And so it can be a challenge to qualify for bonding if you are not ready for it. And so we can get into more of, you know, how you can overcome those barriers. But the things that you need to know when you're qualifying for bonding is, so first of all, you would need to connect with a broker. So technically I am a bonding broker. I'm a licensed broker. I don't act as a broker because I, you know, administer contractor development programs, but I kept my broker insurance license to be able to speak to contractors about bonding and insurance when they have questions. But when you're going out for bonding and you connect with a broker, a surety broker, so the surety broker is going to work on your behalf to help you to prepare for submitting paperwork and everything to a bonding company. And so with the bonding company or surety company, they're used interchangeably. What they are going to do is, first of all, they're going to look at what's called the 3 C's, right? So that's your credit, looking at your personal credit, your character. So they want to make sure that you as the applicant, you have a good reputation and you fulfill your obligations. And then collateral, they want to see, you know, what kind of collateral you may have. Some additional C's that underwriters will look for is also capacity. So your ability to complete projects in the past on time and within budget. And then they'll also look at your cash management. So they'll look at, you know, your accounts receivable, accounts payable, you know, are you paying your bills? So they look at all of these different factors and they determine based on, you know, all of these characteristics, if you are eligible to get bonded. And so they would establish a bond line for you if you do qualify. And so there's some shortcut ways to establish that, or some kind of tiered steps. So there's like a quick bond way that's just based on your personal credit score. And so those are typically for smaller projects that are around, let's say, $400,000 or less. So you as a business owner, if you know, maybe you haven't been in business as long, and so you want to go after a project that is requiring bonding, it's a smaller project, you can apply for what's called a quick bond, and that's just based on your credit score. And with that quick bond, what that will do is, if you get approved, and it's around, if you have a credit score of around 620, 650, you'd be able to get a quick bond typically. And so what they'll do is they'll establish for you to say, okay, you know, maybe you would get approved for a $250,000 bond line for a single project and an aggregate of $500,000, which means, so for one single project, your bond line could not exceed, the project size could not exceed more than $250,000, but your aggregate amount, let's say, is $500,000. So you could have multiple projects that would not exceed a total of that $500,000. So you could have, you know, one project for $250,000, and then let's say another 2 at $100,000 each, as long as you don't exceed that aggregate amount of $500,000.
So for people who haven't done a lot of or who haven't been exposed to bonding, what are the fees and the payments that are associated with them? So how much are they expected to spend?
Yeah, so great question. So for someone who is getting a newly established bond line, so you're new to bonding, this is your first bond line for, you know, a project, your rate is probably going to be around 3% of the contract amount. And so as you start to grow and complete projects, you can at that point go back to your broker and your bonding company, and then you'd be able to negotiate lower rates. So the more business you do, the more projects you complete, you'll get to a point to where you can, start to negotiate lower rates. And, like the big, large general contractors probably have about, 1%, 1.5% rate, like the Clarks and the Swinnertons. But as a small contractor starting out, your rate's probably going to be around 3% for bonding.
Okay. And so and then I'm just going to shift over to insurance. Just talk a little bit more about that. And then also, for example, I have a client right now that is having an issue with obtaining insurance for his type of business. Are there some types of industries or businesses that are harder to insure than others?
So when it comes to the construction industry and insuring types of businesses, it's going to depend on your scope. And so sometimes it can be a challenge, just in the fact that, sometimes you've got to explain to your insurance companies, what exactly you do, because they're basing your rate based on revenues and the type of work that you do. And so unfortunately, sometimes, underwriters don't understand, like, your scope. For example, I've spoken to a contractor recently who, had two company names. And so there was a little bit of confusion on the insurance agent's end of like, okay, how do they rate, the cost for insurance? Because with one company, they were doing one thing. And so it was construction related, but they were doing two different things. And so sometimes you've got to work with, your insurance broker to explain to them what exactly it is you do so that they can figure out how to price your insurance properly.
If I may add to that a little bit, speak a little bit regarding that. I think just like what Jeanette mentions, right? A lot of them, when you work with go back to the bond, is very similar to working with a lender. So you have different solutions from different lenders. So bonds, the same thing, because different surety companies and different lenders have different appetites. So similar apply to insurance. So different insurance company, they have different appetites for different industry or specialties in different industry. So I guess the one way to how to overcome the challenges, like Christina, your clients, right? We just need to think that the client as themselves, they need to reach out to different insurance brokers and ask the insurance brokers that, hey, what's your specialty, right? Some of them just specialize in restaurants, so they've seen different scenarios or different restaurants laws, right? So they will be really, and they know who's the insurance carriers that have more appetite for that industry, and they know under what conditions which insurance company or carriers they will write the policy for that. And then on the separate, right, for constructions, if you do more construction type, there is an insurance company, they know more about that, and the broker know more about that, and they know more carriers that will write insurance for the construction industry. So I think they have to reach out to different, as the first step, that to overcome that, they need to talk to different brokers and then ask them what's your specialty, and then following that, they will maybe be able to find the solutions for them. Because again, carriers for bonds and insurance and lenders, different companies have different appetites for different industries.
Yeah.
Right. Okay. And that's great advice, as you said, because just because one denied you, that doesn't mean the second one would, right? As you mentioned, there are different appetites and there may be different things that they specialize on. So then to spread out the risk a little bit more. And I think Renee had mentioned it earlier that typically there is a 1 million insurance the policy that's required. And then to basically tie them together, is insurance coverage something that you can negotiate on later on?
I think that it just depends on how you are doing in your business. Then you can, talk about rates and things like that with your insurance broker. But it's going to depend. Insurance is, I think, a little more difficult to negotiate, just because the nature of the business, and it's very different from bonding, even though they kind of go together hand in hand, but they're very different products.
I guess the other side too is let's say, can you negotiate with the agency the level of insurance coverage that you need? So let's say if they need, they require 1 million, but through the negotiation process, can you negotiate something like, oh, can we do a coverage of 750K instead? So is that something that you see that can be negotiated or no?
In
Or
a
is that something
very,
that's set?
very rare cases, I have seen that, and where that
Mhm.
would come into play is, let me see, what's a good, and a good example of that would be, if you're a subcontractor, say like second or third tier, and let's say the agency is requiring, that $1 million policy. And so what typically will happen is the prime contractor is going to flow down all of the requirements that the agency puts on their contract. They're going to flow that down to all of their subcontractors. But let's say you have someone who's just coming in for a very short period of time, let's say a week, for example, to do some minor work that they're going to just come on site and then they'll be gone. There is potential to negotiate that. I have seen that happen before. It's rare, because, primes are going to want to cover themselves as well. So it's typically just flow down, but it can be negotiated just depending on the project, your scope. There's so many factors that would go into that, but it can be done on occasion.
Okay, great. Okay. Well, thank you so much for giving us an overview. So I know we may have some specific questions later on, but I'm going to go and proceed to the next portion, which is contract financing program. So Jennifer, what financing options have been available to businesses to support the contract execution?
So this is a very, very good questions, and I think there's no easy answers for that. But on the other hand, I can just give a very high level explanations on the lending market out there. So basically, if you're qualified for any lending products or any loans or line of credits from the banks you're banking with, your primary bank, and those will be the lowest cost, and then will be the financing options, you should grab it. If they offer you something by your bank, then those will be the best things you can find on the market. And then, but a lot of the time, because of a lot of time we see for contracts, right? So you may just, your past performance, like 2024, you're doing maybe 1 million, but now in 2025, you was afforded a contract for at least 2 million to complete it in 2025, then a bank may not be able to facilitate such a big jump on the revenue. So they might not be able to, willing to extend whatever they offer to you. So for that, there is like PACE and other CDFIs out there. So we always joke about that CDFI is the cousins for the traditional banks. We do the loans that the banks don't really do, and then because we take on a little bit higher risk. And then even though a lot of the banks have their separate SBA loan department. So basically, if the lender have the line of credit or any term loans for you, they will do it. And if they think you're a little bit higher risk, they might ask their SBA team or SBA department from the banks to see if they can do a SBA loan for you. And if they still say no, then basically a CDFI probably will be your next options, because we'll take on the loans that will a little bit higher risk than for the traditional lenders, because CDFI's missions to just help small businesses to grow, and we're a little bit more understanding of the big jumps from the revenue. And so you should definitely reach out to the CDFIs around you, and or anyone's that or CDFIs. So those typically will be the second tier, and a little bit higher cost, but then still a reasonable cost. So if you still cannot qualify for that, because at the end of the day, lenders we are still lenders. We still underwrite based on cash flow. Just like what go back to what Shannon mentioned, that the bonding company, they look at 3 C's, and then we look at 5 C's. It's very similar. Your same package is basically what the bonding company is looking, and what lenders looking. If based on that you won't be able to get the loan, then there is some other alternative financing options out there. For example, we can call the factoring company. Basically, you're selling your AR. So once you have the first once you have your first accounts receivable, you can just turn around and you have your first receivable. It doesn't mean you get the money, right? You just have the approved invoice by the prime. It might take them 15 days or 30 days to pay you. Then at this point, you really need the money to pay your workers, and then you can sell to a factoring company or AR financing company. Those will be a lot more expensive than the traditional lender and then or CDFIs, but those are the options there. So I guess it goes back to what we all discussed in the beginning. So even though this is more on for discussions after you award, you got the contract awarded, what do I do, right? This is actually go back to what Renee and Jose all mentioned, that a lot of the things you start when you do the RFP, you should factor all those costs, your financing costs, your overhead costs, your additional potential tax, all those you need to factor into your costs when you submit the RFP to make sure that you have enough profit to make all those payments. Otherwise, you just end up doing for nothing. And this ties back to contract financing, because lenders will look at your capabilities or make payments, as well as the bonding company, your capabilities to make payments, right? So this is go back to not just the post-award, but also pre-award, when you submit the RFP. So those are the, in general speaking, those are the three type of financing out there. Of course, you can use your credit card, your business credit card to fund it, right? But those are even more expensive than the factoring in some way. So how can a business determine the right of financing for their contract needs? I would suggest that when you plan to submit an RFP, talk to your lender, talk to your banker, and talk to free consultants. Like this is free technical assistance program and the nonprofits out there to help you to understand what your costs are, what your options are, because the books all the things to prepare for your financing needs and as well as the bonding needs, basically it's the same set of documents they're looking for. So you have to just we'll get advice from different people to see which one's the best for you. But overall, go to the bank's SBA department, go to CDFIs or factoring or even business credit card are the ways that to support to execute your contract.
Yeah, so two follow-ups on that one. First, I know we have mentioned CDFIs quite a bit. So can you just give a quick explanation of what a CDFI is, and then how they're similar to a bank, a traditional bank, and how also they're different?
Yeah, so CDFI is long for Community Development Financial Institutions. So basically, those are PACE is one of them. There's other CDFIs out there too. So they are only do business loans. They don't take deposits. There's no business credit cards, and most of them don't. Some of them may do a line of credit, but mostly they do term loans. So they just do small business loans to help small business and then to help locally. And typically, a CDFI has the mission either keep the job locally or serve specific segments of the society. So CDFI is basically a lender. They can be either SBA backed by SBA or by the state, or they have their own portfolio. But basically, they underwrite under the same scope, the criteria as SBA, but that was in the details. Some of the criteria required will be a little bit more. Like say, bank will require you 680 and above. CDFIs maybe 600 above will be okay. But on the other hand, there's other. But the key thing is that everybody, as long as they are a lender, and also bond surety companies, they look at your capability to make payments and your capabilities to perform.
Yeah, and I wanted to make sure that that people don't miss what you said earlier. So at what stage of the process should they start shopping for financing?
Before they submit the proposal.
Okay.
Before they submit a proposal, because just like Renee mentioned, right, and there is not only your direct labor, your direct materials, those are the key things, but also other costs, right, financing costs, bond costs, insurance costs, and then any post any reporting requirement, in compliance, did you have the admin people to work on it, and also financing costs. All those may be a significant portion of your cut it from your gross profit, not, because other than the gross profit is your revenue minus your direct labor, direct material, right? So let's say you bid it for $10, your direct material is $3 and your labor is $3. You say, oh, I have $4 to pocket. No, you don't. You have all the other things that you have to factor in to see if you even have $4 to pay all the other things.
Right, great analogy. And so what role, are there any government-backed financing programs that can help with businesses fulfill contract obligations?
Yes and no, because what I mentioned, SBA and iBank guarantee. So basically, if say, for example, Christina, you come to apply for a loan that through a bank, and the bank's typical department thinks, okay, your risk, your case is a little bit weak, they will go to the bank's SBA team. So the bank's SBA team will look at this case to say, okay, this is a little bit weaker than what we think, but this file, we still believe in the business, and then they will send your file to the SBA for guarantee. So basically, knock on the wood, you won't in default. If your loan is in default, you don't make the payments, and then your payment supposed to be $10,000. So the lender can go to SBA to get for 80% of the coverage, but they still eat the 20% of the loss. So in some way, government is backing up certain percentage of your loan, and state have similar program for iBanks. But I would say leave this to your lenders to worry, because the lender will evaluate the portfolios to see if we seek the government funding or not. And also sometimes with those government funding assistance, so you're saying SBA guarantee, and there's a fee associated with it, right? Just like if you buy a house with less than 20% down, then you have to pay PMI. You basically pay an insurance for it, that you pay extra cost. Sometimes SBA will waive it, sometimes they reinstate it. So there is extra cost because higher risk, higher rate, right? So that will the lender will consider all of those. So do you if your question say, oh, do you any grants the government will issue to help companies to perform their contracts? I would say maybe it's a no, in a more like a blank way, that there's no direction. Okay, there's a pool of grant that you can go to apply. So hey, the grant will help me perform my contract. And based on what we know in the landscape out there, I don't see this type of grant to help you to perform a specific contract.
Okay.
But
Great.
sorry, I want to add something back here, and go back to one of the slides too. And then for the but there is other nonprofits out there. So there is for example, I know that there is another agencies out there that will partner with City of LA, County of LA, and LAWA. They have the CDABP program, which is CDABP contract development CDABP assistant programs. So basically, they will provide coaching to small for free, because it's also a nonprofit function to help small business owner to understand what's the process to get a bond, and then how to prepare for that, and then choose if they enroll in that program, and if they got contracts awarded by ultimate owner is City of LA, County of LA, and LAWA. I think that that program actually assists the small business owner to increase their bonding capacity. Use their own fund. They do more like a guarantor, have a co-signer to help you to increase your bonding capacity. So in some way, those are government-backed financing programs, because those are your tax dollar in actions, right? They actually help you to guarantee your company to increase your bonding capacity a little bit. So in some way, those are the ones that can help you. And again, I would suggest the audience reach out to your lots of the technical assistants or any other consultants out there who knows the landscape of this market, and then maybe connect you with the resources out there to help you to grow.
Yeah. Well, thank you for that great segue, Jennifer. You made my job easier. So the next section is actually on collaborating with technical assistance organizations. So you mentioned some nonprofits, right? So those nonprofits you had mentioned would be helping you with the bonding, right? So can you just now, in the context of this, can you mention the organizations that you had just spoken about with regards to the bonding?
Right now the currently the CDABP program is administered by Meriwether and Williams out there.
Mhm.
And then, but I don't know if again, just like any programs, they might up for renewal or what they might be change of the administrator. But right now it's the Meriwether and Williams. But if anyone want to know more about that, you can just email us and we can make the proper introductions, and then we can give you a lot more of the nuances about that.
Okay. And so along with that one, how can businesses proactively, oops, there you go. How can businesses proactively engage with organizations like you mentioned to ensure contract compliance and project completion? So you had mentioned that one. And then also, of course, I wanted to, Jose, if you can mention what PACE does with regards to how they can collaborate with us. Or Andrew, I think Andrew may have been back. So Andrew or Jose.
Well, I can't get my camera on, but
We know what you look like. It's all right.
all right, thank you. You've seen me many times. Well, so one of the things that we do, we try to help you get the contracts, but we go over the contracts with you and making sure that we do abide by contract compliance issues. And many times, those I know Jose had mentioned earlier about dispute resolution, but there's other things that, that are very important, like prevailing wage reporting requirements, record keeping, making sure that we're abiding by California labor clauses. So we could review each of those sections of the contract to make sure that you're adhering to it. Now, there's a lot more regulations when you do government contracting. And because, that's taxpayer money, and utilities as well, because it's ratepayer money. And so they really have kind of real strict adherence to making sure that we're compliant in all aspects. So not just the performance on the contract, but making sure that our bonding's in place and insurance is in place. And if change orders come up, that we have the financial and ability to make those adjustments. And keep in mind, like, there's also the potential of change orders, that could also require some adjustments in the contract and in compliance. Or if you happen to run into some kind of challenge while performing on a contract, then that'll be the time that we can go back to the project manager, make sure that we're documenting what the challenges are and recommended cures to overcome the challenge. But here at PACE, once you get the award, we can help you. So let's say something was to come up and you need to increase staffing. Well, we got resources in staffing with staffing partners or our workforce center itself, and where we can try to address those. So we really try to be hands-on and tap into our network of resources. So just like we have Emerald Cities and Renee with CMG, those are close partners of ours that we work with. And so, we rely on our network and our personal experience to see how we can help you.
Thank you, Andrew. And I'm just looking at, so before we close off and do the Q&A, any last thoughts on this one? And if not, then we're going to go ahead and I'm going to look at the questions that are on the chat. Okay. So thank you so much. What I'm going to do right now is look at some of the questions. So we will, okay, let me see. I think this is a question for Shanette, just what is the difference between a bond and an insurance? They seem to provide coverage. So if you could just kind of quickly go through some of the differences between them.
Yeah, sure. So really quickly, insurance is going to be like general liability. So coverage is for like bodily injury, property damage. It's going to cover the business side of things. Where bonding is going to essentially cover your performance and not so much cover, but it's going to guarantee, your performance and your payments to subs, suppliers, and vendors while you're on the project. And so, insurance is very different from bonding, but bonding is required for public projects, and of the threshold amount, usually $25,000 or more for a project, but that can be, that's set by the agency and the project. So bonding is going to guarantee your performance and payments to suppliers and vendors while on the project.
Thank you. But I think with that said, the other similarity is that they're both required, it seems like, in
Yes.
most types of proposal.
Both required, yes.
Okay. So there is enough. Thank you for that one. The question is, what happens if the agency that handled my awarded bid is not communicating with me anymore? I do not have any information on when my work will begin or who to talk to in the city. So I guess what's the advice that you will give if they've been awarded a bid and then the agency is not communicative? Like who is the person that you should be reaching out to? And this is a question for anyone.
I'll jump in on this question real quick, and it sounds like somewhat of a bench contract, or what we would consider like an IDIQ, indefinite delivery, indefinite quantity. So a lot of times when you're looking at some of these RFPs, again, this is understanding what the agency is actually developing. They may be developing a bench, meaning multiple contractors are going to get awards, then that there's no promise of actual purchase orders that come down. One of the things that we suggest all the time, when you get those contracts, you have to be in contact with that contract administrator and ask those specific questions. And one of the best questions to ask when you finally get somebody on the phone or you finally get some correspondence via email is to say, what is the budget, Ali? Is the budget still X for this particular project? Because what'll happen is it may be something like a 3-year contract. You never hear anything. It just goes into a black hole. And then all of a sudden you find out at the end of the 3 years, like, wow, there was nobody that ever got awarded off of that contract. And it's sad to say that happens quite often in contracting side, especially with bench contracts. That's why you have to understand going into it, that may be a possibility where they're just establishing a bench. You'll get a contract award and you'll get excited and go, wow, I've got this contract. Reality is, maybe 10 other contractors actually got that same award. So you have to understand what we would consider is what is the contract vehicle. Is the contract vehicle and actually a firm fixed price contract, a cost plus contract? Are they actually executing on that contract? Or are they just establishing something that they know that they may need in the future, whatever the case may be? So I guess the suggestion would be, you've got to be pushing back on that contract administrator. There is a point of contact on that contract. Then I would actually look one step above, director level, and go, okay, hey, I've got this contract. Nobody's corresponding with me. Can somebody give me some information? It's going to take some time. And it's easy for us to say this, but I know I've been on the frustration side of trying to get in contact with the contracting officer or contract official on that side. It is tough, but you've just got to keep pounding away at it.
Yeah, I would also add, this is Andrew, I would also add that sometimes like LA County, they have master agreements. And you get a master agreement and you think, okay, I'm in, but now where's the contracts? So a lot of it depends on their funding cycles and contract cycles as well. And so if there's a lot of work, then chances are you will get something. But if there isn't, then many times you'll hear crickets, So, but keep that in mind. That's part of the protocol in procurement and in contracting, and that's why, remember, contracting and performance sometimes built on relationships, and so you have a contract administrator, and so we want to make sure that you're in contact with them. You stay constantly in contact with them. Make inquiries as to what kind of projects are coming up. That way you can really kind of, sometimes the squeaky wheel gets the oil, and so we want to kind of look at it that way, building on relationships, understanding the contract cycles and what's their budget and what upcoming projects are in the pipeline.
Okay, great. Thank you, Andrew. And so I wanted to address some of the questions. It seems to be there's a lot on lending, and I know it's been answered in the chat, but I wanted to bring it up. So for a contract where you're providing delivered goods and services or delivered goods and you invoice the county upon placing the order, what are some lending options given that the county should pay you within 30 to 45 days? So Jennifer, if you can take that, I know that they can reach out to you, but if you can just give them a quick response to that.
You're on mute.
Sorry,
Jennifer,
I was on mute. Yeah. So I think the
No.
same thing, the landscape of the lending is that first of all, you should talk to your primary bank to see if they can give you a line of credit. That will be probably the cheapest option. You can get it from them. If not, then ask your primary bank, say, hey, can I connect it with your, do you have SBA department? So see if the SBA, the lenders, that bank's SBA team can help you. If not, then then you're welcome to talk to CBFIs, including PACE. We are one of the direct lenders. We'll look at it and we understand contracts and we understand your challenge. So those will be, and we'll see if we can do something for you. Again, that will be more like, this is more like a term loan or even line of credit to the lower cost. If we still, because of your past history or various reasons, then you still cannot qualify for that. So another thing, maybe we call the alternative financing, maybe factoring would be, and you sell your accounts receivable, maybe the options out there. So those that would come to my mind. That will be the several options that we will see. And then, but I also would like to see see if Renee and Shanette, and do you see other options out there? Because again, PACE is not only a lender but also a nonprofit to help small business grow. With more resources we can find for the business owners, the better.
That's a great point. Mind if I jump in, Jennifer, on that? Is that understanding, I would go back to understanding who your target is. So let me give you the best example for us locally right here. If you are a certified local small business with LA County and get a contract with the county, you're going to get paid in 15 days. Believe it or not. You go right across the street to the city of LA, you're not going to get paid in 15 days. So understand that, know who your target is. Here's another great example, state of California. It's net 45, but here's the catch. In the contract, it tells you if you're not paid in that 45 days, they're going to incur penalties. You're actually going to get paid penalties from the state on that side. Knowing this is absolutely critical, knowing who you're targeting. The flip side of that, let's say you're targeting a prime contractor. You've got to do your due diligence, talk to some of those other suppliers there and say, hey, how are they doing, on payments? I know it says net 30, but what do you know? You may find out, man, these guys don't pay their invoices for like 6 months, 9 months. And that's not an exaggeration, but you've got to know this going in. Who are you targeting on that side? So really key to Jennifer's point, having that backup funding, having those lines of credit, absolutely critical to your growth. But again, knowing who you're targeting, knowing what the payment systems look like on that side, really important.
Well, thank you. And there are a lot of questions on lending. So Jennifer, if you can put your information on the chat, so they can reach out to you. And then what I do is after this one, I do send out a follow-up email with all the contacts of all the speakers we have today. So you have these resources as well. So I wanted to close off with this question because I find it, I find it interesting. So with all these questions with contracting, why will any business want to get any contracts at all? And what are the benefits? So I want to close off with that one before I want to do that as the last question.
Can I go first as a lender from the lender's
Yes,
point of view? Because
absolutely.
they pay you. If you perform, for sure they will pay you.
Well, that's a great benefit.
But if you perform, if you do the pay application correctly, for sure they will pay you. In theory, they will not bankrupt. That's why we lenders, we like it. The clients with the government contract award.
I can also jump in here. From just my experience in the past, almost 20 years now, working with small contractors, when you can figure out how to navigate the process, it can be very lucrative for you and you can really grow your business. I have seen it happen time and time again.
Great.
I would add that it diversifies your revenue stream. So if you can do business with the government in different levels, okay, municipalities, federal level, state level, county, Orange County, Riverside, City of Sacramento, and then you could go into utility companies, or you go into the private sector, you're diversifying. So the better you understand the protocols of contracting, and it potentially leads to millions of dollars. So that's what it's worth. If you want to stay small, then don't get in it. Okay, but if you want to expand and grow and scale, then really look at the opportunities. You know, meet, like I'm gonna tell you, you know, I worked closely with Renee, and you know, you got to find network experts that can help guide you and help you understand. You know, so if you get a proposal that's 488 pages, don't get overwhelmed. Okay, an RFP, because they're cut into sections, and once you understand it, that it really can lead to opportunities and help you develop your skill set. Because as a buyer, as a former buyer with one of the local cities, I wanted to increase the vendor pool. And the only way you increase the vendor pool is to make opportunities wide open. And once you understand that, there's you know, small business certifications, developing a network in your industry, developing relationships with procurement departments. You know, those are all steps that you need to take that at the end of the day will be well worth it.
Great. Right, well said. So I think the message that I'm getting is like, as with any other thing, it's hard and there's some challenges. But with all the technical assistance providers and organizations like PACE and then Jeanette, and then also Renee Coda, right? So we're here to actually assist you with your journey to contracting. So I wanted to close off with just next things that are going on. So we are so this is the last module. So yay, congratulations to us. we reached the last one of the modules. We have a few different events that are gonna be happening the rest of the year, including some Meet the Prime information sessions, some roundtables, also some more networking events. So make sure that you sign up to our newsletter and go register yourself with ProcureLA so you don't miss any of those opportunities. And the biggest question that I get is, what if I am not eligible for ProcureLA? As I mentioned before, PACE has many different programs that will give you the same type of opportunities as ProcureLA, right? It's just a matter of putting in the different program. But we will assist you with access to capital with Jennifer, and then also with the procurement, and then technical assistance with Andrew, Jose, and I. And then also, this is, as I said, these are the modules. So what I would recommend is so now this is Meet Point. You don't need to register anymore. So that now that all the modules will be available for in demand, just go to ProcureLA.com, and then you'll be able to see all the recorded modules. And so this is my contact information. I've enjoyed having you guys here. So thank you so much for hanging in there for the last 6 weeks. So I know that some of you have done all the modules. So congratulations. I wish I can give you a prize. But the price is a one-on-one consulting with us. How about that? That's like the best price ever, right? So make sure you take a screenshot of this, and then have the good rest of your afternoon. And yes, and make sure you register at ProcureLA.com. Thank you.